Hello guys, in this presentation I will be talking about investment in fads. This was part of a presentation I gave in my course, so hope it can be beneficial for you. Initially, what do you mean by a fad? A fad is an intense and widely shared enthusiasm for something, especially one that is short-lived. What separates a fad from a trend or a growth is that it rises up sharply and falls down sharply as well. The time frame for this is very low as compared to normal trends or growths. One of the earliest known fads was the tulip mania in the year 1637, when the prices of tulips fell down sharply. Tulips were firstly introduced in European market at this time, and they were looked upon as premium products, luxury products. So people used to pay high prices for these. But as more people came into plantation of tulips to reap those profits, the exclusivity of the tulips ended, and so did the prices. One of the recent example of a fad is the Bitcoin. Bitcoin, as many of you know, is a cryptocurrency which allows anonymous payments between two parties. In the year 2014, the sudden rise in popularity of Bitcoin just skyrocketed the price from below $100 to about $1,000 when the burst bubble finally burst and the prices just collapsed to below $250. Bitcoin is on the rise again as seen by the end of the graph here. Here we talk about the life cycle of a fad. To explain this better, I will be taking the example of the dot-com bubble burst which happened in the year 2000. The first phase is a discovery phase. In our example, it would be the discovery of internet as a service. When internet first came in, more and more people were fascinated by it and started to open up their sites. Every other company wanted to you have internet. This was the popularization phase that people saw that internet services needed very low investments and gave high returns. So investors also started flooding the uh, internet portals, and any company wanted to have a site of its own. Third phase is the hype and universalization, where it was looked upon like a very genuine high value product, and venture capitalists uh, started investing heavily into internet sites. The prices of the dot-com companies rose and rose, and this was further backed by the fact that many of these VCs thought that internet was going to be the thing of the future and set up their own institutionalized funds directed towards only dot-com investing. This was total commitment by believers. And finally, when the prices rose up and up, the stock values rose up and up, but the fundamentals were not so strong. People finally began to realize that they have really played a bigger hand than they could manage here, and finally doubt and skepticism screened in, leading to defection by those parties only who had invested earlier. This is a consolidated curve showing the Nasdaq Composite Index during the dot-com burst. As you can see, it rose up sharply and then fell down sharply as well. Another recent example of this case is the Nintendo Pokemon Go launch. As soon as it launched the game, the stock price of Nintendo just skyrocketed because it was doing great on the App Store. Maybe you have also played this game. And after some time, when Nintendo finally announced that no, we are not going to earn a lot of money by this game, it's mainly Niantic, a Google company venture, who will be getting most of the share of the revenues. The prices just collapsed. This is the inherent nature of a fad. Now, for to deal with fads in a business situation, there are three things which are necessary. First is to identify the fad. Second is to assess your risk, that as to how much risk are you willing to take during the investment. As a fad is a two-edged sword, it can go up and down anytime. It won't give a clear warnings also. So risk assessment is pretty critical here. Using this information, it's possible to empower your clients as a broker to make him make value judgments. In this whole PPT, we covered basic things. First was about markets, that markets are not always rational. There is bounded rationality, so that people behave with euphoria and euphorism. And second is the power of social media in this age, where any good news or bad news is sensationalized in seconds and really has a very quick impact on stock prices. In terms of service, to deal with this problem, we need to have a dedicated team who will be on a lookout for fads and using the data to protect and empower your clients. So that was it.